this kind of makes sense. If I want to hedge rates, I want to do it on the way up. I don't want to do it on the way down. That kind of looks like you want this product when rates are going up.
Yeah, and it was a very different tune last year, right? So even from 17 up until last year, right? So the 10-year peaked at 3.2. These products were actually getting really popular, right? They were starting to really separate themselves performance-wise because you wanted to be hedged. So they're doing really well in 18. It sort of looked like these products were actually going to take off. And then flash forward 19, that rug just got completely pulled from under them. Rates are back down now to 1.72. So anyone who actually was buying that product has actually been hurt this year, right? Just because we have a completely different rate story this year than we did last year. But sort of these were setting up, and everyone was coming out, big marketing push saying that we're going to be in a new rising rate environment. You should be piling into these types of products.
So what's happening now that turned investors away, Tom?
So what I think one of the struggles that these products have, they were taking in some assets, but there's a lot of options when it comes to how you're going to play rates. And what really happened in 2018 was it was sort of the year of the short duration ETF. So as rates were coming up, everyone was just taking their duration themselves, shorting it, buying short duration products or floating rate products. So anyone who had that type of product last year was doing really well. And now we're seeing the opposite, right? So people have now taken money out of those short products and gone really long, like something in TLT. So instead of buying these packaged rate hedge products, it seems that more of the market just prefer to do it themselves and just pilot and just sort of switch that duration based on all these different products.
I guess the takeaway from this is that it's really hard to create targeted products that you kind of can guarantee have some degree of longevity.
It's really hard, especially in such a competitive space. You need all the stars to align, right? And actually, your guest before were just talking about the dollar, right? We saw this with currency hedge products a couple years ago when the dollar sort of really went off, and sort of like when you were buying international, the default was to go hedged. But now that story has changed. It's so hard to have this one sort of packaged niche strategy to really sort of that's going to hold on for the long term.